Welcome to the Royal Flush Podcast, Episode 4. In this episode, we sit down and have a fantastic conversation with Jonathan Salinger, who specializes in the mortgage industry. He's been a mortgage broker for 30 years now. We talk about different topics and scenarios. We talk about the current market state of mortgages and real estate. We talk about his history, his past. Fantastic story. It's a great listen. If you're interested in buying or selling a home or interested in the mortgage industry, Jonathan's a wealth of knowledge. Take a listen. Hope you like it. Jonathan, welcome to the Royal Flush Podcast. Thank you very much for being here. I appreciate it. Let's start with your childhood, your background. Tell me a little bit about yourself growing up, where you grew up, and what Jonathan Salinger was like as a kid.
Oh, wow. That's a loaded question. Well, let's see. So I grew up mostly in Providence, Rhode Island, so I'm a hometown boy. I did live in California for a few years when my mother and father split, and she took me to California. And we lived out there when I was in kindergarten.
Okay.
But we moved back to Providence when I was in first grade. And I pretty much grown up in Providence, on the east side of Providence, mostly my whole life. My parents are divorced, and my dad lived in New York, so I did spend summers with my father. He had a beach house on Fire Island. I spent winters, we would do ski vacations. So I did spend a lot of time with my dad, but I lived with my mom.
Gotcha.
And I grew up in Providence. I went away to college. I went to University of Colorado in Boulder because I was a ski racer.
Yeah, how did you pick that school? What was that process like when you were? What year was this?
Oh, sorry. Wow.
What year was this?
All right, so I'm old. So I graduated from high school in 1980.
Okay.
To give you an idea, my parents divorced in '65. When I was a few years old. So my dad, one of the things, to make sure we had a relationship is he would take me skiing.
Okay. So
that was really all I knew about being a father when I became a father is taking kids skiing or taking them to the beach because that's all I ever did with my
Gotcha.
dad. I went to university. I got into skiing with my dad because it was sort of a way for us to something to do together, and I got involved in a little bit of competitive skiing and just generally the vibe of being a skier, being out in the mountains and chasing fresh powder. And so I wanted to go to college in Colorado. So cool. I did. I went to Boulder, and I still have a lot of close friends. We still get together, a bunch of us, every year in Aspen and go skiing.
And this is Colorado University.
University of Colorado in Boulder, yeah.
So
they're big. The bigger.
Are you excited about Deion Sanders?
Yeah, a little bit.
Yeah,
a little bit. I mean, it was a disaster when I was there because they were on probation.
Oh, okay.
For a violation with Chuck Fairbanks. It goes way back, but they had hired him away from the Patriots, and he had done a lot of recruiting violations. Yeah. So we couldn't be in any bowl games the whole time I was there. So. And
then they were really, what was that, early '90s when they had Cordell,
yes.
And they won a national championship, right? Was that the kind
That's
of
right.
time
Yeah,
frame?
they had. The Buffs have had moments of brilliance, and of course, the buffalo that they ran every year around the field before the game, the real live buffalo that occasionally would break into the stands was one of the highlights of going to Folsom Field. But yeah.
That's funny. So it's 1980. You're in Colorado, and what are you studying in school?
So I was a theater major.
Oh, really?
I had been an actor at my high school. I had been in a lot of the plays, and I'd gotten mixed, but some good enough reviews. So I was a theater major and didn't really, I was a theater major and I was like a marketing minor. So it was weird to be in the art school and then also doing some stuff over in the business school. But that was sort of my thing at the time. And when I got out of college, I spent a few years pretty much acting, being in.
Really? I didn't know that.
Television commercials and music videos.
This is our first real superstar right here,
right,
Kyle.
Yeah. Yeah, my 15 minutes has long passed, but I did have it.
That's very interesting. And then, how did we get? Well, let's stick more in the family. So tell me about your family now. I know you've got a couple of kids that are doing some exciting things, right?
Yeah. So I met my wife when I was actually still acting in New York and coming back and forth to Providence, and decided I should get a real job because this woman wasn't going to marry some guy who's bobbing from acting job and skiing the rest of the time. I couldn't be a bum anymore. And so we met, we had children. I have two boys. They are now 26 and just turned 23. So my 23-year-old graduated from University of Pennsylvania, summa cum laude, and is planning to go applying to law schools right now, but has been working at the Department of Justice's very elite antitrust prosecution unit in San Francisco, and is planning to go to a top, law school. Yeah. When he finishes that 2-year program, but he's working on a lot of the bigger cases because he can't tell me anything about them.
Very cool.
And my older son went to Miami of Ohio and undergraduate and worked in tech sales and marketing for a little while, decided that wasn't for him, and decided to go back to school. And he's currently in law school at American University's Washington College of Law. He just finished his 2nd year. Although wasn't traditionally a great student, has been doing honors level work there. Mm-hmm. And largely because they gave him a ton of money if he maintained a certain grade point. So he's been doing it. And he's working, and he wants to specialize in mostly labor representation, like labor unions. And he's currently working for, while he's in school, it's a work while you go to school program with Major League Soccer in their player representation. That's pretty cool. Yeah, so he's reading the contract now.
So the union side of that business.
And it's a big deal now because he's actually going to, because it's in his alphabet range, he'll be the one that reviews Messi's contract. So really, I'm sure I'll get some interesting insight. That's pretty cool. Because of course that's a radical thing in sports. It's going to change potentially how players are played in other sports too. But so it's both the boys. I don't know what I did wrong. Shakespeare would say I really, he said shoot all the lawyers, but apparently I'm going to have 2.
Yeah. What? So you said 26 and 23. If you were looking at them when they were 15, did you think both of them would pursue law?
No, I thought. Sam doesn't surprise my older one. Doesn't surprise me because I always thought he would be like a sports age. He was always a captain of this team and that team, and very interested in sports, and really very upset by any injustice. Okay. Like how many times I said to him, I said, dude, the world is not a fair place. You can't put that expectation on everything. So he's, he doesn't surprise me. My younger one had actually always planned on going in medicine. I mean, this was a kid who, came home from 6th grade and he told me that he was taking Chinese. And I'm like, why are you taking Chinese? He goes, I don't know, Dad. It was the hardest course I could find. Like, who thinks like that? Yeah. And he speaks Mandarin, which is funny if you see him because, he looks Irish, but he speaks Mandarin. He was one of those people that I thought was going to go. He was a science nerd. Yeah. And it wasn't really because of COVID, where he was in pre-med program at Penn. He called me and goes, Dad, I can't, I can't take these courses online. I mean, it's this high-end math, this really interesting stuff with these teachers online and their broken English. He said, he said, I also have a National Scholastic Art Award for my art. I also won writing awards. I don't just have to be. And I was like, no one ever told you had to do that. Sure. But what happens to these kids when they're sort of the smart kids is they get in a, they all work together and they all, as part of their status, take the harder courses. Good. We all have to take the hardest courses. So we have to get in and you have to meet certain prerequisites to get the harder courses. And generally speaking, those are sciences. So they all end up science nerds just because they're the academically competitive kids, right? They're, they're not the jocks. They're not the, and so, he said, this path was kind of chosen for me. I'm like, well, you can do whatever you want. I mean, you're a high functioning perfectionist. You're probably going to do well in whatever. Yeah. He could be great at anything. Yeah. So, the kids are doing quite well, both of them. They actually miraculously were both home for Father's Day. It just worked out. Okay. My son visited from San Francisco. He's actually working from home, and my older son came up from D.C. just for the weekend. Went back Monday morning, but so I did get to see. It's unusual for us to all be together, unless I plan an expensive ski trip. Then they find a way to get there.
Dad, you know what? I just got a couple of days off of work, and I'll be able to meet you out there, no problem.
But if I tell them I want them to come to a wedding or a funeral, they're not available. But,
Well, that's exciting. I mean, it sounds simple, but I'm a younger father to younger children, and congratulations. I think that's when my kids are 23 and 26, I think to be able to talk to them in that same aspect and be proud of them and what they're doing and be good quality human beings. It sounds simple, right? It's really a low bar. I just want to raise good quality human beings.
I used to tell them happy, healthy, productive members of society that hopefully someday are financially independent because I'm just not that wealthy that I'm going to carry you guys. Yep. And, but that's really all you want. I didn't, what you do, who you marry, how you, really, you got to find your own way in the world. And we've been very fortunate. The boys are, they're they're awful and snarky, and they don't miss a trick, and you got to be on your toes around them because we're a family of stone crushers. We're always on each other about stuff. But it's a lot of fun. Like, as much as we sound like we're bickering, we so miss each other when we're not around. We'll call each other just to razz about something that we didn't get a chance to say while they were home.
Sure. Yeah, that sounds fantastic. So let's transition into your professional life. You are a mortgage extraordinaire, I like to call it. And so let's start maybe, how did you become a mortgage agent, mortgage broker? How did you get into this business? Take me back to where that started.
Well, it's funny. So, I had been a period of time where I was acting, and I was trying to decide what I was going to do if I wasn't going to act. And as I had been in sales, part of the thing I did acting, I would actually book, I booked industrial gigs through it was before SAG and after merge, so through the American Federation of Television and Radio Actors, which was slightly different than the Screen Actors Guild at the time.
Okay.
They handled commercial and industrial films and appearances. So like someone would come into a trade show in New York and they'd want to hire a couple of actors to work the booth. I would get the call, and I had a lot of positive recommendations because I would come in and I have a very good memory. That's why for acting, like, I could memorize scripts pretty well. So I would go through their whole product line, get as much information as I could before I even went to the day there. When I get there, while they were setting up the display, sometimes I'd read through their, all their catalogs and literature, and I'd read the whole thing. And they were always, the people that were hiring, they thought we were just actors to smile and introduce people and go over and engage them. Yep. And they said, wait, this guy's actually talking about the product line. He actually knows stuff. And I would, I would light and then introduce him to a salesperson. Yeah. So I had a following of companies that would just hire me, would ask the agents to hire me, when I would come in. And so I had some sales background. And when I met my wife, I was dating, she was a corporate strategy consultant for Fortune 50 companies. She was traveling around restructuring Whirlpool's global distribution network with a bunch of, University of Chicago and Harvard business people. I figured she wasn't going to marry some, loser who's going from acting job to acting job and skiing. So I had a buddy that I mountain bike with, and he said, hey, a guy like you make a ton of money in the mortgage business. And I'd be like, I don't want to fill out forms for a living. Go, the way you talk to your buddy. And then when I realized, I called him. I said, hey, remember that job you offered me? He goes, oh, the one you told me to shop? Yeah, that one. Right. And but he did. They were he was at the time running GMAC Mortgage, which was pretty big. I mean, I'm going back to 93, which is pretty big organization, and they had a good training program, and he hired me, and he gave me the territory he didn't want, which was South County, and I started. I learned the business, and it's funny, I was so focused on just not failing at it that it didn't dawn on me until one day where I came into the office. I was called in the office, hey, you have clients coming in to sign some papers. And I show up at the office, because back then we did everything manually. And I went into the little conference room where this older couple was waiting, and they were both third shift workers, grandparents. It was the first time they were buying a house. So that they could help raise some of their grandchildren, and they're buying a multifamily. And I happened to go in, I get the documents. It was a government loan with a local grant, and I went to sign docs. And as I got there, my processor was sitting in the office. She goes, the underwriter just brought the spec, the loan's approved. So I came to meet with the people, and I said, hey, I've got actually some great news. We still need a couple of things before we can close, but the underwriters approved the loan. And I remember this because the woman was sitting, probably in probably my age now, like in her 60s, and I saw her start to shake. And she stood up, and she walked over to me. I'm almost tearing up, and she grabbed me and was crying.
Really?
And she gave me a big hug, and the husband got up, and he sort of, as I was, he grabbed my hand that was behind her and gave me a little handshake.
Yeah.
And, they were, I came home to my wife and said, I've been so busy trying to not fail, to make enough sales calls, to bring in enough loans so that, I don't get fired, that it didn't dawn on me until today that I was actually helping people. That, that these are people, in many cases, I was desperate. I would take any loan. And some of them had been declined in 2 other places, and I'd look at it, and I'd read the guy. I said, I think this should work. And I'd go to my boss, and he'd give me some, get this tax returns, get this, do this, and see if it, and I was just digging. I didn't want to give up. And, and I came up and said, I think this is something that I can do for a long time, because I think I can be good at it. And I like the guy I see in the mirror when I get home. I feel like I've done some good work.
Yeah.
Because, I mean, I had friends in financial services, I mean, in the 80s. And I would say what they were doing would be described as something other than good work. They were making money, but, at what cost to society? So that's really how I got into it. And it was just, it just becomes, it's a lifestyle job. You're never working and you're always working. I mean, I got called 9 o'clock last night. Someone needed to change an offer, and they texted me, and I got them the offer letter right away, and they couldn't believe I was doing it. I said, well, I was out in the garage fixing one of my bikes, and I was able to accommodate. But, people call you, they ask you questions. You sell a product everybody needs and nobody understands.
Yes.
So it's an opportunity for me I like to hear myself talk. Most people in my family are done with, they don't want to hear me talk. They've heard my stories. Or, my kids, my wife, they don't want to hear me go on and on. But my clients, they have a high tolerance, I guess.
And so how many years have you been in this business now?
This is going to be, I'm coming up on 30 years.
Wow.
Right? Because I started in like August of 93. So yeah, I think for like 4 years I've been saying I've been in the business for 29 and a half years. Because even though I count for a living, I have a little trouble with that.
Yeah. So 30 years in the business. So you've been through a lot of different markets. So I think I want to talk about what this mortgage and real estate market was like a couple years ago in COVID. And then I really want to talk about what you're experiencing now. And so take me back to, I think, March 2020, COVID hits.
Right.
And I think everybody was scared, not sure what to do. And so tell me what that was like in your industry when it first happened. What were your thoughts of how it was going to affect it? And then take me through maybe the next weeks, months, and a couple years on what actually happened.
I think that, when you've been in the mortgage business, you learn after a period of time that, bad things are good for the mortgage business. And I certainly wouldn't want to be characterized as an ill wisher, because obviously I would never wish bad things on people or the economy. But, we had a huge, drop in rates and boom in business in, right after 9/11, because again, when there's some sort of global panic and people are worried about markets and businesses shutting down and terrorist attacks, they generally move their money out of stocks and equities and into bonds. And when you're buying bonds, you're buying fixed income, you're trying to secure your money, and particularly secured bonds like mortgage bonds. When you're buying them, it drives the rates down because they don't need to offer high rates of treasury. You're already buying them, right? Yep. So we tend to see this, what they call a flight to quality. When people are afraid of what's going on, they want to invest in bonds and keep their money on the sideline so that they don't lose money. That usually drives rates down. So, whenever I see disaster, whenever I see like disaster film, earthquake or disaster film type, of titles in the headlines of the newspaper, I generally expect that we were going to see a boom. But what COVID was something that I didn't expect, which was extraordinary, is that not only did people, really, that behavior drive the rates way down and have, the government trying to keep rates down to keep the economy moving, but people became hyper-focused on their homes because they couldn't leave them. So,
that I think was fully unexpected, correct? Is that
unexpected. I didn't expect there to be a run on housing to drive the prices up. I mean, there was hardly anything available. A lot of people were afraid to move. We had people coming from in the Rhode Island market. Keep in mind, as Flagstar, I was doing all 50 states, but most of my business was local. Rhode Island, Mass, Connecticut, some Florida, and California for some reason. In the local market, we had people coming to visit from cities. They were leaving their apartment buildings in Boston, New York, and visiting family, or coming to Rhode Island and southeastern Mass, and deciding they wanted to stay. Didn't think they would ever go back to their big building. Didn't think they'd ever have to go back to their high-rise office buildings. And so they were purchasing while they were there was a lot of people here that were purchasing. There were people that were choosing out of nowhere to come to Rhode Island because of certain parameters, which is very surprising. Who could live anywhere? I think because COVID accelerated that work from home progression by about 10 years. It's companies who didn't believe people would work were forced to experiment with it and found out, well, gosh, now do we really want to pay for all the office space? A lot of the big law firms cut from 3 floors in the fancy building in Boston to 1, and ask people who's going to be there and who's not. So I mean, it was a pretty extraordinary thing, and we really got buried. I was very fortunate is that I had been traumatized and 2003, summer 2003, when we had interest rates first went down to about 3% the very first time. And we got crushed with business, and I did almost a $500 million, just a hair under $500 million in volume out of the 2 branches that I was running, staffed to do about 175 to 200. So, I mean, I was doing 2.5 times what I was staffed for. I had processors crying at their desks. I had, it was really a strenuous period for us. And so for every job after that, I leveraged the fact that I had market share when banks went higher. Say, listen, when you give my processor loan officers, you generally give them a laptop and a couple of screens to plug into or a docking station. I said, I want you to do the same thing with my processors. I want them a complete docking system in the office, and I want a second one set up at their house. Thinking that at least if I go through this again, they could go home, they can have dinner, and they're still trying to keep up with their work. They could always log in later. Let's not separate people from their families, understanding that we can't always control how stuff hits the funnel.
Yeah.
And so the minute I set up the office for Flagstar, which I had done in 2019, and I told the prospects they also had setups at home, most of them stopped coming in and they were working from home. And it works very well for us because, we measure you're paid based on, you have so much timeline to get through each file.
Yep.
And we were getting huge performance. So we didn't miss a beat. I mean,
if anything, it sounds like you might have been even more efficient.
Some of the people that came into the office stopped coming in, because I was only allowed to have one person in the office for a while until we got new COVID policies from corporate. But we really, we tripled in volume, and now people, and it was weird. Like you would get, text or email from an underwriter at 2 a.m. Like people were working weird hours. And keep in mind that I was leveraging underwriters from all around the country. So I was also working with some in California. We got really good at moving business and loads of work to people, right-sizing loads. So Suppressor didn't have too many loans. We could offload to another. I mean, I think my management team was extraordinary. And the remote work made it much easier because when you had an idea, you would just email the person. And when they were working, they would read it. And it wasn't this idea, operations staff were only available from 9 to 5.
Sure.
So you could say, and sometimes you wouldn't get an answer the next morning because maybe they had, but everything really moved really well. And we really stepped up and we exceeded the numbers that we had provided Flagstar that we would do for the first year. We exceeded them by like 75%.
It's a pretty amazing number.
Without adding staff, So it was, I hate this because I know it was difficult for a lot of people, but if you meet anyone in the mortgage business that said it was difficult for them, then they must have been a unique situation because we were really busy and, and trying to do it with humility, because a lot of people were struggling. Yeah.
You had mentioned right there, I think what I learned from you and really anybody in life, when the word customer service comes to about, or you think of a retail environment, but really you're in the customer service business because the home buying process, probably I think among any transaction, is probably the most emotional transaction that most people do. Right?
Yep.
And it's due to a lack of education, it's due to fear, it's due to usually a large sum of money, but I think it's mostly, like you mentioned, most people don't understand the process. It is simple, but yet very, very complicated at the same time. So I think, why don't you help me break down, I'm going to throw some words in terms I think a lot of people might know and might be simple, but help me understand what they mean. What is Fannie Mae and Freddie Mac? Who are they? Are they people? What are those two organizations?
Well, all right. So Fannie Mae and the federal. So Fannie Mae is Freddie Mac is Federal Home Loan Mortgage Corporation, and Fannie Mae is a similar acronym. They are two quasi-government organizations. That means they are technically independent companies that are sponsored by the government. And Fannie Mae and Freddie Mac are created this way so that there is a managed competition. So it isn't just one. And what they really do is they're clearing houses, if you think of it from mortgage money. So they match up somebody in Florida that's trying to buy a condo to a pension fund in Seattle that needs to invest its money in some secured fixed income bonds, right? So what they do is they make sure that money is available to lenders at pretty much at the same cost, constantly everywhere in the country. So you don't have, it's really expensive to get, to buy a home in some places than in others. Now, there are some local attributes to markets. For instance, the Northeast, the greater Boston and New England market in particular is considered the most competitive in the country. So you will see lenders undercutting each other more, and so people in New England often getting a better deal than what you see in California or Texas. For the most part, those are minor differences. So Fannie Mae and Freddie Mac, so when a lender takes a loan, they'll often, the company that services the loan, right? The people that send you the statement, that would be a servicing lender. That might be, Flagstar Bank, the bank I worked for, or any bank, Citizens, Wells Fargo. They all service loans. But they actually get the money. They sell the loan to Fannie Mae or Freddie Mac, who then creates the bond and sells it out in the market. And the lender retains the servicing rights. That's the rights to they collect it. They're responsible for collecting interest and paying it. If it doesn't get paid, they're responsible, so they have to collect. But they get a portion of that interest is paid to them in servicing fees. Mm-hmm. And servicing is a business of scale where if you do a ton of it, you can make money. And so you have a lot of giant servicers that will buy servicing from each other. But the actual money that the bank is lending is in many cases being replenished by Fannie Mae and Freddie Mac as you're selling it, retaining the servicing, and then getting income on that loan for servicing the loan, and hopefully a leg up to refinance the customer when they're ready. Hopefully they're going to capture a customer for some of their other banking products.
Yeah. Right. Now, how many, if you had to do a very broad percentage, how many loans across America you think are originated or serviced through Fannie Mae and Freddie Mac?
God, I should have prepared. There are statistics on this, but Fannie Mae and Freddie Mac are most of the loans.
Yeah, would you say 50%, 70%?
I would say probably. I'm going to guess, in the 50 to 60% range, and then a large part of the balance of the loans that aren't Freddie Mac are what they call government loans, which would be FHA, VA, the USDA, and then a smaller percentage, say the 5% would be what they call non-conforming loans. Those are conventional non-conforming, which would be jumbo loans that are above the Fannie Mae limit.
Gotcha.
But again, that's a smaller, much smaller percentage.
Yeah. But I would say these are everyday people like me and you, right? These are people who are buying. Well, there's no $200,000 house anymore, but $300,000, $400,000, $500,000 houses, usually for their families.
Yep.
Usually, most people only just have one property,
That's
and
right.
they're going to a broker like yourself and trying to find a relationship, and ultimately you're using Fannie Mae and Freddie Mac.
Right. So what it allows, it means that it gives lenders the ability to differentiate, and have some different products, but at the same time all sell the same commoditized product. And what you'll see is many lenders like ours are Fannie Freddie Direct. Is that me? God, that's really rude.
Yeah.
Thought it was off. Apologize. So where was I going? I'm sorry.
We were talking more about Fannie Mae and Freddie Mac.
Right. So Fannie Mae and Freddie Mac, many lenders we sell direct to Fannie Mae and Freddie Mac. And so when you're selecting your investor, some of them would be Fannie Mae and Freddie Mac, in which case Mortgage Equity Partners would retain the servicing of the loan, and then we would collect the servicing value. What we're seeing right now in the market is that since no one's really making money on mortgages, it's hard to make money because when the interest rates are high, nobody wants to own the servicing of the loan because they know that rates are going to fall soon and those loans are likely to pay off early. So it's one of the things that gives a loan servicing value is the fact that it's at a low enough rate, or it's in a type of product where, like government loans, because they have lower loan to values, people have less down, they're less likely to refinance anytime soon. Well, when the rates get up near the historical limit, which is where we are, we feel like we're at that turning point. Servicing becomes, nobody wants to own the loans because they're likely to pay off soon. So because of that, Fannie Mae and Freddie Mac pricing is not very good. However, a lot of these banks are gambling that, we'll give a better price, we'll get some of this business in, and then when the rate drops, since we're already mailing them statements, we'll have a better chance of refinancing them and making our money back then.
Sure.
So strategically, we're seeing, so every day you go in, the best price is often like day to day can change from lender to lender. Whereas traditionally, if you were direct to Fannie Mae, Freddie Mac, that would be your best price.
Gotcha.
But right now, there's a lot of speculating and jockeying because banks are, it's strenuous to make money right now if you're in banking.
Yeah. Let's go with another term that I think a lot of people know, but they don't really understand what goes into it, and it's definitely a hot button item right now, is interest rate. If you could give me, what's the definition of an interest rate and how is it calculated? I feel like it's just this, arbitrary number that nobody really understands, was really low a couple of years ago. Now the perception of height. What goes into the interest rate in a mortgage?
Well, I'm glad you asked that question because there is a huge misconception that when the Fed changes interest rates, when the Fed changes the federal funds rate, which is really the overnight rate that banks can borrow from the federal government. So they can borrow and return the money, right? They have the overnight rate. And that is something that's set by the Fed. That is a set number that then, and certain things are set against that, like prime rate. Prime rate, you pretty much add 3 to the federal funds rate, and you have prime. So prime's like 8.25 right now, right? Prime was a lot lower. It was down as low as like 3.25. So you could see the big change that we've gone through. That would affect things like that. Often affects like equity lines of credit and things like that, where you're getting prime plus, where you're borrowing, really getting a line of credit from the bank. Mortgage rates is created in the bond market. It's just like a stock. So if it's a good time to buy bonds, which usually means you're worried of the stock market, that'll drive rates down. Similarly, if the stock market's rallying and everybody wants to make money there, then usually mortgage rates are over here. We want you to invest, so rates have to keep going up to give a larger return on the investment for people to buy them, right? Yep. So it's a market-driven product, which is why most of the time, the day the Fed lowers rates, people come in, oh, rates went down. No, usually the day the Fed lowered, rates go up. Similarly, the day the Fed raises their interest rate, our rates go down. And the reason why is markets are more sophisticated. Markets will trade, people will buy and sell based on the rumor. You know, the expression buy in the rumor, sell on the news. Yep. By the time the Fed does it, it's old news. The market's already priced in 50 basis points or whatever in movement. So when the Fed only moves a quarter, rates go down. Or they move 50 basis points, but they don't say we're definitely going to move again. Everybody jumps in now it's a higher rate. Let's go in and buy them now that we're getting the higher rate, and they drive the rates down that day. So it's really a market-driven thing, and it's based on consumer sentiment. And usually when consumers are uncertain about their future, if they're worried about their jobs, if they're worried about, then they will slow down their spending. If they slow down their spending, then eventually that affects retail numbers, it affects factory orders, and all those things slow down. And then that means companies give less performance on their stock, and people are more likely to say, I'm going to wait this out, take money out of stocks, and buy bonds and drive the rates down. So usually when the economy begins to slow, rates drop, which means people are able to borrow more money. That increases the amount of money in the economy. It brings the economy up. Similarly, when inflation starts to run away and people are, rates will go up to where people will that'll remove some money from the economy because it's harder to borrow, it's more expensive, and that'll slow the economy down. So it's supposed to work.
The seesaw, right?
Yeah, and with some intervention from the Fed. And for the most part it does, but when we hit these extremes, it's painful.
So help me understand, if I'm buying my first or my second house, how is it that I can go to 3 different mortgage brokers, maybe you're one of them, and have the same financials, every one, but potentially get quoted a different rate from 3 different people? Tell me how that process works out when you've gathered all this information from this customer, they're qualified, and you're going to quote them or rate or set them a rate. Tell me what that process looks like.
Right. So there's a lot of factors here. Some of them are legit, and some of them are, in my opinion, more to do with the model of that particular lender. Okay. But for the most part, the quotes, assuming that your situation clearly, because most cases, Fannie Mae or Freddie Mac or FHA or VA, the standard programs are going to be your best option. And for the most part, they should be similar priced. However, you have what they call portfolio product, which is a lot of banks right now, because they're having trouble lending because people don't want to borrow at the higher rates, and they still have to provide a certain portion of their portfolio has to generate interest income for the CDs and for the things that people bought, right? So they need to generate. So they are coming up with sort of portfolio, a special 7-year adjustable rate that's fixed for the first 7 and then adjusts, at a special rate to try to get some of their depositors to borrow money or to bring in some people from the outside that then they can make depositors. So you have some specialized product that is it's not brought to market, right? So it's not priced the same way. Then you have different lenders have different models. For instance, like we are a very, very lean shop. And that has a lot to do with the fact that me and my team, we get all our referrals, because we don't buy leads, are from real estate agents who have partnered with us as their referral partners, help them get their stuff closed, and our past clients, because we're a lot of us are pretty mature in the business that are either buying or referring us, friends and family, and that's and then we have some attorneys and some CPAs that work with us as well. So we receive a lot of this business. And a lot of the people we get are very well qualified and could get their mortgage anywhere. So to make sure that we're providing the best value, my team and I, we have a lower comp plan than the average. So we make a little less per loan, but our attitude is, well, we don't make any money on the loans that close with our competitors, right? True. So we rather be we run a little leaner. We also run lean in, like I don't buy leads. I run a leaner office space now to going into this market. We spend most of our marketing dollars not on big advertising, but promoting our own personal brands, rubbing elbows,
Sure.
sponsoring, events and doing, we do big luncheons for a lot of the realtors. We do some stuff for past clients, things that are rubbing elbows with people who have the potential to be referral sources. So we run a very, it's funny, we have a great social media platform, but I would call it relatively low tech. We're old school, staying in touch with the people that need our services to do their business or to buy their homes. And so because of that, we run leaner. We're a little more confident when we quote because we know that our margins we're running with leaner margins. That being said, you never know if you're the lowest. There are these specialized portfolio programs, banks running specials. There are sometimes these smaller mortgage brokers. They have one investor that's trying to get their attention, so offers a really low rate for 2 weeks, and they happen to lock you in then. Yeah. I mean, it definitely behooves the consumer to shop. I would never tell even one of my clients not to shop. Just consider your source, because unfortunately there are a lot of lenders that if they're quoting a rate before they've gathered all your information, it can't be an accurate rate in most cases because everything is risk-based price now.
Yeah.
Every factor of your financial situation, your credit package can positively or negatively affect your rate incrementally.
Yeah. So you had taught me some of this. I had a previous broker that was fantastic. I bought up a couple of properties with him, and we did 2 transactions with yourself. And what I didn't realize, and I should have, is that the mortgage industry is just like any other business. So they have they have a margin structure. How you guys make and produce money in your back end is the same way as any other business. If you're going to go to a candy store, their lifesavers might be 25 cents and mine might be 21. And why I shop at that store might be the relationship I have with the owner, might just be the product, right. Might be the speed, might be the convenience to my house, right? All these factors that we go about in making decisions every single day when we purchase things. We don't realize that we're purchasing this loan, and we need to make those same factors in decision making when going through that. And somebody like yourself is the reason why, in my opinion, why you should or should not use somebody. To me, the mortgage business and getting a mortgage is so relationship and trust driven more than any other transaction that you've ever had in your life. It's crazy. And I think building up the trust and understanding why or why not they're asking things is important. So tell me, I know you've got a lot of great stories. Tell me about, you talk to somebody and you need to gather a lot of personal information.
Right.
What can that be like? Maybe tell me a funny or unique story of how somebody gave you pushback on that. Tell me what that's like.
Well, so, technology has really helped, obviously, because now, I have an app on my phone. I send the client an app, and on the app, they start to answer questions. And so it's them on their phone, just the two of them, and in mingling with a secure server. And so people I seem to get really good quality information without having to go through the old interview process. But back in the day where we had to do the interview process, and we still do it sometimes, you're getting 2 years of W-2s, 2 years of federal tax returns, personal and business if you're self-employed. You're getting 2 months bank statements from every one of their asset accounts. In addition to that, you're making the borrower, think about how intrusive this is, you're making the borrower explain any large deposit that they had that isn't the obvious payroll. And large deposit, that...
Is it still under 10,000 is not questioned?
No, so that definition has poked around, but now it's pretty much 50% of the qualifying income. So yes, under 10,000, if your qualifying income is $20,000 a month, then yeah, that would be... So, obviously for most people, a $4,000 or $5,000 deposit has to be explained. Which, can be irritating, right? And I
helped my buddy fix a truck, and he gave me $1,000 for it.
Right. I lent money to my buddy. Well, where did this deposit? Well, he lent me the money. All right. Well, did you pay him back? You didn't show me pay back, or did you have a rental? Of course, I didn't have a rental agreement. A lending. I gave the guy money. So people, you deal with a lot of frustration, and the qualifications got magnified after 9/11 and the passing of the Patriot Act because they also use that as an opportunity to police our industry better for money laundering. because one of the great ways to launder cash is through real estate transactions.
I would love to launder some money, by the way.
Would you?
Oh, absolutely. Well, it's fascinating.
I got a brand new LG washing machine, and it comes out nice and
oh yeah.
But so they, because of that, now they want. So it wasn't just complying with like Dodd-Frank or applying with RESPA or one of the other acts, the many acts. We're the highest regulated group of financial services industries, including even more so than insurance. Add to that, we now had Patriot Act coming in and saying, well, we want to make sure you're sourcing every dollar into that transaction so that we know it didn't come from a terrorist organization, which when you have. We have some cultures in our market that I've been working with that came from countries where they couldn't trust banks, and so it wasn't uncommon early in my group someone to show up with money that was dirty. Why was dirty? Well, they bring it was in the coffee cans that were buried in the yard, like there was actual dirt, and they would bring it. Well, bring proof of funds. I'm like, well, I can't stick dollar bills in the copy machine and say copy like a bank statement. But so it's very frustrating for people who don't trust banks to all of a sudden be expected to document everything. But we find ways to do it, and cash is not something we see a lot of anymore. Anyway,
less common now. Yeah, but again, I think that's you guiding them through the process, right? And so, if you meet somebody for the first time, Susie and her husband are looking. What's that first conversation like with them? I'm going to put in touch. Like, hey, Susie, I've got a friend, John. He's a phenomenal mortgage broker. Let me have you guys have a conversation. What is that conversation like?
Well, I start by asking them a bunch of questions. What are they looking to do? Where do they live now? How do they earn a living? Give me some background of what my next set of questions are, and also to get an idea of what their trajectory is, to share their vision of what they're trying to do, because really I'm just a facilitator. I'm just there to help them get them where they need. And so once I get a few of those questions answered, how motivated, usually by the time they're talking to me, they're somewhat motivated, or they just want to start going to open houses and looking at properties, and the realtors are stopping them saying, we don't schedule appointments, we don't bring people if we're not sure they're qualified buyers. That's our professional standard. Otherwise, the other agents won't trust us to bring people anymore. So you need to be pre-approved first. So it puts the brakes on, and now they're stuck doing the part that nobody likes to do, which is the mortgage proctological exam, if you will. So once I have the question, and then I explain how I work. I say, this is how I work. I say, I need to collect a bunch of information, which I can certainly do any way you want, but the easiest way is I'm going to give you an app, either a phone app or just a link on your computer where you're going to go and it's going to ask questions and answer questions. I'm going to need some documentation, which usually I already can give an idea, even though the system will tell them what it wants because I've already asked what they do for a living. Since you're self-employed, and if you file as an S corp, I am going to need 2 years of 1120S's and 2 years of your personal 1040 returns, all schedules as they were filed, W-2s if you were to W-2. These are the type of things I'm going to need. A lot of times, depending on what they do for a living, they're both teachers, they're both in certain positions. I can issue pre-approval and qualify you just with your pay stubs, and the credit report, the information I pull in from the application. But these are the documents I'm going to need before I submit the loan. Sometimes I don't need everything for me to know they're qualified. But they still give them a list, and then they will usually complete that. Usually I'll text them the app from my phone, and usually within an hour or two I get a notification that they've completed the app. So then I generally will go into that file, review it first, read through it, pull in the credit, look at their debts, make a list of questions, and then call them and say, okay, here's what I found, ask them some questions, make sure I have everything right. And then usually right then there, shortly after that call, I'll send them the pre-approval letter and an itemized cost and payment estimate as if I was locking that loan that day for the purchase price or type of property or sample property in the property range they're looking in the area where I can estimate taxes and insurance. So they can see, here's what the total monthly payment will be when I close, and here's the total out of pocket after all the fees and paying my prepaid tax and insurance. Here's where my first payment would start, so that they can start to get a feel for, this is what you're getting yourself into. And then I offer that service for any home. So when you're looking and your agent or you see something online, you want to go look at it, if you text me the address, I'll look up the property, And I'll use the list price unless you tell me what price you want to run it at. And then I'll plug in your scenario and I'll send you as if your offer was accepted today and I was locking your loan today. Here's the itemized estimate of what it's going to cost out of pocket and itemized breakdown of the monthly payment. And I think that helps people a lot. So when they're comparing properties, they can also compare how they cost. And then since I have that information, they ask for the pre-approval letter, I can simply bang that right out to them that they can give to the offer. And I personally recommend that we do a separate pre-approval letter for every offer dollar amount. So even if you're approved for a $600,000 house, you're making an offer at $500 or $550, I redo the letter at the $500 or $550 because the real estate agents seem to feel that it's better that way. And it also allows me to make sure my buyers understand, because properties can be, you're looking at West Warwick and you're also looking at a property in another part of Warwick or, North Kingston, and, the properties can be similar in size, but the difference in taxes could be $200-$300 a month, because every municipality is a little bit different. So those factors matter. So sometimes, I can afford this because you were looking in a town with really low taxes, and now you pick something similar. Well, gee, there are much better deals here. Well, yeah, there are better deals because you have to make more money because there's other expenses. So that's the process is to get them to trust me, give me their information so that I can provide them real-time financial information every part make an offer, and then make sure that they have a good pre-approval letter that's well-positioned where I'm working with the real estate agent to make sure the offer makes them look better than the other people so they have a better chance of getting the property that they made an offer on.
I think in the handful of real estate transactions that I've made, information is power. And knowledgeable, trusting people is what the power sits on. That's the foundation. So I think with an agent, you need somebody who knows the market that you can trust, but to have somebody like yourself in the back pocket that you can say, hey, listen, the monthly payment is probably if not the biggest factor, one of the big factors of how people are going to make this decision, right? Ultimately, it's like, how much is it going to cost me a month? This is what people are making the decision on. And to be able to have somebody that you can text, call, email, hey, Jonathan, I'm at $355. What's the rate today? What's my monthly payment looking like? Because that could, for some people now, it could $10, $20, $30 could be the decision, right? It's very, very tight. And so being able to have that quickly and understanding the taxes in this town, whatever, those are the things that allow you to trust somebody and to know that this person has my back. And that's how you build the relationship. And that ideally when you do that deal and 5 years later, they're going to go, I've got the guy. How many people in your life have told me, you're my guy?
I hear it all the time, and I feel like, early in my career, I thought it started to happen just because, I'm all about the love, right? I want everyone to be happy. I want everyone to get what they want. I want to participate in other people's success. It's just sort of a nurturing nature. That's why I manage other salespeople. Because, it's like herding cats. One word for me, they do whatever they want anyway, but at least when they have a problem, I feel like they have someplace to go so that they're not panicking. But yeah, I think that, it's, as I got older in the career and I had made more mistakes, which I had learned from. I mean, that's what you really are. You don't really learn from your successes. You think, you just pat yourself on the back. I was lucky. I was a genius. But when you make a mistake and you have to clean up after it, you learn a lot. And I've made so many mistakes now that I actually have some wisdom. So, now I feel confident when I speak with someone that chances, like in the case I brought up earlier where a person had, they had been told they didn't qualify for a loan right after they'd been pre-approved and their offer had been accepted. And I said, well, I'll take a look at it, but I'm confident enough to know that, more likely to assume that someone else made a mistake than I missed something. And I knew it could be done, and I stepped in and I got it done. So I think, confidence is key, because if you speak with people with real confidence and you genuinely want to help them. I mean, I've told many people, don't do it, don't buy it, don't refi right now. These numbers really aren't great for you. Because for me, it's a long game. If they might not do that loan with me that day, but if they know that I'm trustworthy and I'm going to treat they're going to have no problem referring their mother, their friend, their cousins, their own children to somebody who's going to put their needs ahead of their own. And I think that that's always been a key piece for me, that if I can build the reputation, then people will trust me. And that's what's happened. Now I have real estate agents that don't really use me, haven't used me in 15, 20 years, or only know of me, but when they present the offer, they know I'm good. They know, they see me around. They see that I have other offers being accepted. When they ask other agents in the office, because I've been around so long, there's always someone that's, he's a good guy. I've worked hard to be consistently on the side of the client. And the client really, in those transactions, and I don't take anything away from realtors. I think realtors, they work in many cases harder than us because they have to drive people from property to property and they put a lot of work in. But really, the loan officer is if done properly, the way I believe the job should be done, they're really the only person that's really in your corner, right? I mean, they're there. They've seen you naked, right?
Yep.
They've seen all your financial information. They know how much money you make.
All the warts.
I mean, I have CPAs and I have financial advisors that refer me their top client. I do a lot of business financial advisors, and they're always fascinated that in first 5 minutes, they've never even seen my face. I gather all information that they've been managing people for 20, 30 years, and they won't tell them how much money they make or how much business is worth or how much they have in savings and other, you really see everything. And I believe that creates a bond and a major responsibility. I mean, I work for them, and all the information they give me, I have to keep secret with them. And, I really can't be more loyal to the real estate agent or the person that referred me than once I create that bond with the client, it's like, I don't know, when you get a new dog and you guys are linked now, right? And I feel that, my team and I do a really good job of instilling that in the client and living that way. You never have to worry if you said the wrong thing if you don't share stories that about your clients, right? You don't have to worry if you gave too much information if your goal is to give minimal. I mean, I always, when they say, well, we want you to, the listing agent calls me because, you have a pre-approval letter, we just want to know about these, we just want to check. Have you seen their...
Yeah, how are they looking?
Have you seen do you actually look at their tax, like the insulting question, did you actually qualify them? Which I said, of course I did. They're very strong. They're very well qualified to buy at and above this price range. I'm sure they're going to buy something soon. I mean, I always make sure that I say things that are going to make the listing agent want to consider that offer more because I work for the borrower. Yeah. I mean, I work for them. Yep. Period, paragraph.
What's some advice you can give to anybody in the current market? Let's say, let me give you a scenario. 28-year-old couple, they both have great jobs. They've been looking for the last year, and they're starting to get discouraged. On the mortgage end, what's a piece of advice you can give them, given the current market we're in now?
Well, I think aligning yourself with somebody that, this sounds very self-serving, but it's been really true. I mean, we're getting offers accepted because we're well known in the market as a team of people that are considered very above board. And I don't think I've ever given a pre-approval letter for someone that then couldn't close. It's they know we're good. Aligning yourself with a good mortgage person, really, we're willing to invest time in your market, see everything that comes up because this is a market where you can't really have a value discussion. The value is what you need to pay to outbid the other people as value. You can't go by square footage and how many people there. So my suggestion is when you find the place you want, you're going to have to pay for it. There's really no
magical deal out there.
Right. So have a list of all the things, all the boxes you need to check. Whether it's the porch or the attic or the finished basement or the ability to expand or the yard or whatever those things are. Certain type of kitchen. A place for a man cave. Whatever it is, right? Have the list, and when you find the property that checks a lot of the boxes, and then when you go to look at the property and you stand and you walk to the front, you look out the front window, you stand in front, you look at what's in front of your house. Like, what am I going to see every morning? And if you like that, and if it checks a lot of boxes, then just talk to the realtors. What do we need to offer to get it? I think the idea of trying to get to not underpay by 4 or 5% is crazy in a market that can see anywhere from 20% to 0% appreciation in a year. Unless you don't have to steal the house that you're going to live in because of the additional value it brings in shelter. Because if you rent, you're still paying a mortgage. You're just paying somebody else's, right? So, I think that's the advice I give is be prepared because at a certain point when you like that house, you're going to need to shoot from the hip. And if you're one of those people that needs to make sure that I'm not paying a penny more than necessary to get it, in this market, you're not going to get it. You're going to need a lot of luck to be successful. So that's really my goal is don't be afraid to fall in love with a house, but just make sure when you do, it checks all the boxes. And when you fall in love, understand that love can be expensive.
That's true. Some things I've heard from good investors is the best deals I've ever had are the ones I overpaid for. That the perception of the deal, I think, hinders a lot of people from making the decision.
Right.
And fear is, the being fearful or fear of not getting the right deal or the fear of overpaying hinders a lot of people from that. Where I always say,
well, it's self-sabotaging.
Yes.
I mean, people will literally, they're nervous, they're not sure if they're ready. I mean, buying a house, there's also the idea of a mortgage, right? 30-year mortgage, which of course is a joke because I don't know anyone. I don't think I have a client that's been in a mortgage I've given for more than 6 or 7 years. But it's like getting married, till death do us part. You know, we have this idea that everything we're doing is forever, and so it has huge consequences.
And you're stuck, right? This is it. Nothing can be changed.
Most people buy a house and they sell it or move within 5 or 6 years. They refinance 2 or 3. I mean, that's what I tell people now. That well, rates are high. I'm like, right. Thank God rates are high right now because otherwise there'd be 4 times more the buyers competing on the properties.
And the prices would be even higher.
There are a bunch of people that say, well, we're going to wait for rates to come down, which is, I think, crazy because when rates come down, now you have all these people that have been are going to come in the market. Whereas if you can find, if you're always looking and eventually find the house you like and then you buy that house, even if the rate's really high, when the rates go down and you would have gone into the market, you can just refinance and get the everybody gets the rate, the low rate eventually. I know that sounds self-serving as mortgage people, but it's true because we get paid to refinance you. So if I say, wow, I could save this client of mine $200.
You love refinances, right?
We're going to call them. Yeah, it's funny because we're bad at it. Like we never market them, but because when the rates go down, our clients are calling us too fast for us to, a lot of times, it's the end of the week. I should call some of these people, but every other people I meant to call Monday got sidetracked for the people that called me quick because they wanted to refinance. Because but yeah, you will get the low rate eventually. But the most important thing is to be engaged in the market because even if every time you lose a house that you underbid or don't get, you learn something from it. You learn about what I need to bid. You learn about was that the one that I should have paid up for, and. The best thing about these markets is that everything you see now is probably going to be gone in a couple of weeks. And everything you look at a couple of weeks isn't on right now. The liquidity means that don't worry about missing something. Something else will come up. But because of the demand being so much greater than the supply, you need to be actively engaged. You need to make sure your agent, when something comes up that's in your that sphere of what you're looking for, that you get out and see it right away. You'd be one of the first people. If you do that, eventually you're going to find something.
Yeah, and don't be afraid to pull the trigger. And I promise you, in 4 years, you're going to look back at it, and you're probably going to say, I got a good deal.
And the beauty of a market like this is you can always sell it.
Yep.
I've had people buy houses, and all of a sudden they got the job they didn't want, or they decided it wasn't for them, and within 6 months sell it and make a profit. Now, I don't want people to count on that always being the case. But right now, at this second, that has been the case.
Before we transition into some of your hobbies and what you like to do for fun, is there anything else maybe that I didn't cover, any kind of word of wisdom, anything that you would want to say about your amazing career and what you do?
I think it's apropos that, if you are a person looking to purchase in the state of Rhode Island and you are a first-time home buyer, I mean, this Rhode Island housing is literally giving $17,500 in grant money towards down payment and closing costs to first-time homebuyers that meet the income qualifications, which are pretty high. They're right around $120,000 a year, and it's real. And it's it's not even a second mortgage. We just listed on the application as $17,500 gift in the gift and grant section from a state or a local municipality, and they give you the money. So I mean, and it can be for cover all the down payment and closing costs. You can still put 10 or 20% down and have that money to go towards that and the closing. It can be used for down payment or closing costs on any primary residence purchase for first-time home buyers. And if you're thinking about buying, you've been on the fence, it's a really good time. And it's a very usually we would start advertising these programs right around the time Rhode Island Housing would start running out of the money. But they have a significant amount of money. I mean, based on their trajectory, they say we have enough to get us through at least the end of the year this year. So the timing is really good. So I just feel as a public service announcement, the people should be aware of that.
Okay. Yeah. And now you have a pretty cool hobby that I wouldn't say I'm interested, but I think it's very fascinating. So tell me about how you got into this. I would say, I don't know, high-end mountain biking? Tell me what.
So I had been a ski racer when I was younger, when I was in college, and I did some mogul competition, and I blew out my left knee pretty bad in 1981, or I had a completely reconstruction, then again in 1983. And so one of the things that they recommended, so all year I would ski and my knee would get worse and worse and worse. And then the doctors recommended that I get involved in biking. my knee would recover all summer on the bike, and then I'd destroy it all winter.
Okay.
And so I got into mountain bike, and I started getting into mountain biking. Mountain biking, I got into biking in the mid '80s, and then mountain biking started to become a thing. 5 or 6 years after that, I bought my first mountain bike. I started riding with a lot of good mountain biking in the state of Rhode Island. I started riding a lot, and then because I had a skiing background, so people showed me this thing called downhill mountain bike racing. So in the very early '90s, I started to get involved in that, where I bought a downhill bike, which basically is like a motorcycle without a motor, like a pedal, big suspension. And I started going to downhill races and doing okay, and got involved in the local mountain bike associations of doing bike tours, and then enduro racing came up, which is similar to downhill mountain bike racing, except it's 5 courses, 5 stages with transfers in between them. So you actually have to ride a bike that can ride uphill too, because you have to climb back to the top for the next stage, and there would be some pedaling in it. And that was great, because you go to these venues, they have them at sometimes ski resorts or just big trail networks, and they'd set up these 5 largely downhill stages, but the venue would always pick their 5 best, most challenging things. You go there Saturday, you practice all day, and then you race on them on Sunday.
Okay.
And you once you start, you go to the stages. You have a chip, so you chip in and chip out. So you kind of even though you're racing, you're kind of on the course alone, and they're really treacherous courses. They'll have big jumps and drops and things that you have to learn. And I sort of, I got involved in it because with bad knees, it was hard for me to ski as aggressively as I did before.
Gotcha.
But with the bike, it has suspension. You have a fork and you have a rear shock, and that will take some of the beating, so you can go a little faster. And I just got really hooked by it. I got hooked. It's like I call it my healthy addiction. Because I get out. Even at my age now, I can get out 2-3 times a week for a hard ride and still recover. But yeah, it's. I do a little bit of enduro racing on the Eastern States Cup, which goes from, pretty much from Pennsylvania to Maine. And, it's just a fun, silly thing to do on your bike.
So this is your drug nowadays?
Yeah. That, it was still skiing, obviously, with the kids. But yeah.
Yeah.
Since I had the knee replaced, I like skiing again now, because I don't, it used to be a painful thing to do, and now it's not so painful.
Sure. Yeah. I think it's a really fascinating hobby. Before we wrap it up, tell anybody who's listening or watching, how can they contact you if they're interested in any sort of mortgage, buying a house? How can people get in touch with you and maybe take advantage of your services?
Right, so my name is Jonathan Salinger, and you can reach me at jonathansalinger.com. That's JONATHANSALINGER.com. You can also reach me anytime on my mobile. Yes, my mobile text is on my website of the internet. And I think that's important when you're a service provider. And that's 401-524-4900. And yeah, I'm available, call or text anytime. If I can't pick up, I'll get right back to you.
Okay. Well, thanks for the time, Jonathan. I loved the conversation. I hope you enjoyed it too.
Oh, I did. This is really fun.
All right, cool. Well, check us out next time. Thanks for listening to the Royal Flush Podcast.